Okay, this is an update on the Bitcoin trade. This is BTC USD on the MetaTrader platform. So I'm going to talk about a few things that we've had some questions about over the last couple of trading days with this one. First of all, I'll talk about the strategy that I use to trade Bitcoin, and then right now at the levels that it's sitting here at 86.72 approximately, we're up about 600 and over 685 points on this trade. And this trade developed a few days ago as a result of a continuation breakout trade. And that's the technique and the strategy that I primarily use when I trade Bitcoin. And the reason that I use the continuation breakout trade, this is a method that I developed back in 2001. And I'll briefly explain a little bit of the history of what I was trying to do with this technique and the strategy. So when I first started trading, like most people, I joined a lot of chat rooms, I joined a lot of signal services, and none of them really produced any decent results. And I was hoping that in these chat rooms, when some of the chat room moderators would call out trades, that they would also teach me a strategy at the same time. But basically, they were struggling. They were not qualified individuals to be trading. They were struggling to just, keep the monthly subscribers that they had, and they were constantly changing their strategies. And one of the things that I noticed, and I'm in California, so I trade the New York session. I trade around the clock most of the time, but I'm usually trying to rest or sleep during the Asian session. Now, that doesn't mean that I won't have any trades, because I do have my charts and my office set up so that I'm notified if something happens during the Asian session, but I like or prefer to trade the London and the New York session. And what I noticed what was going on during the news events with the London and the New York trading session is that these chat room moderators would call out trades if price was reacting to news. For example, if there was a 8-hour range of consolidation, I'll show you that in just a moment here. Just to give you an example, an 8-hour range of consolidation, if price was eventually moving out or above that resistance point because of the news, they would immediately call out a trade saying go long. And everybody in the chat room would go long. And there really wasn't any strategy other than the fact that they were hoping that the reaction to the news was going to keep pushing price up higher, and they were just going to pick some number. And it was always random. There was never really any consistency with it as far as the take profit levels. And what would happen is within 30 minutes to 45 minutes, the trade would collapse. So on the breakout, when they would say buy, within 30 to 45 minutes, the trade of the price would come back down into the range of consolidation, the prior range of consolidation, and then people would get stopped out. And everybody had a different stop loss. He wasn't really recommending a stop loss. They would always say you shouldn't, risk more than 20 or 30 or 40 pips. Every chat room moderator had a different idea of what the stop loss level should be. And that is not the way to trade. First of all, you know that because that puts you in a certain category of only executing certain types of trades. And what I mean by that is that if you're going to use a 20 pip stop loss and that's it, that's okay for you, but it might not be okay for the next guy, because the next guy might be using a different strategy that's going to require a bigger stop loss. It's going to require allowing price to move around a little bit more. And when price moves around, depending on the currency pair that you're trading, there's going to be more activity. For example, the pound yen, it covers a greater distance on pullbacks, breakouts, trending moves, bounces off of, short-term bounces off of support and resistance. Those retracements and pullbacks are deeper than what you would typically see on, for example, the euro dollar. So you can't use the same stop loss on certain currency pairs in certain types of trading environments with certain types of techniques. That's what I'm getting at. I'm not saying that you can't use a 20 pip stop loss. What I'm saying is you're going to use a stop loss of 20 pips, then you're going to be using specific types of trading behavior, trading techniques that will allow you to use a 20 pip stop loss. Otherwise, you're going to get stopped out prematurely. So that was one of the biggest problems, is that these chat room moderators were using different, it was their idea of a stop loss, not ours, and not based on the goals that we were trying to achieve. So that was the number one first problem, is that people were getting stopped out prematurely. The other problem was that they never really had a specified take profit level. They would just say buy now, and then if they were comfortable with the results, or they thought it was going to top out as a reaction to the news, you see it, right? We've all seen it. We see price moving and rallying, let's say, above a previous support level because of the news, and then you see like 20 or 30 pips, and you're thinking, oh, I hope I can get another 10 pips, but you might only get 7, and then you just go, I'm just going to take it. And that's pretty much what they were doing. They would think that to themselves and they would just tell everybody to close the trade. So that is a big problem. What I was trying to do was avoid that. I was trying to create a way to trade breakouts or when price would take out a previous high or low with consistency so that I could get into the trade and let the trade work itself out. You know, give it time, let it move, let the reaction, normal reactions, normal small retracements, things like that, let all of that happen. And I could consistently sit back and let the trade hit those consistent targets over and over and over again. Now, that in itself took a great deal of time and testing because how do you know, if you don't have any experience, how do you know how far price could typically move to, or you know how far it's going to cover, the distance that it's going to cover after a breakout? So you also get the idea, you also understand the idea that different news events will cause different types of reactions. Some news events aren't worth trading, even though everybody wants to trade them. And it's also based on the numbers. Sometimes they're just not any big deal, right? It's exactly as expected, or the market was already anticipating those numbers. You know, the reaction is always going to be a little bit different. It is exciting because it's always going to change, but that's what I'm getting at is that you really have to take all of that into consideration and take it into account when you're trying to determine how far price could typically go on a breakout. So you have to test that. You have to take a look at daily average trading ranges. You know what time frame are you going to be using? What indicators are you using for confirmation? Because you can't just use any old indicator for confirmation on something like that. So that's what I did with a great deal of testing. I came up with this strategy called the continuation breakout trade, and that's the one that I use when I trade Bitcoin, and it is consistent all of the time when I trade Bitcoin and any other currency pairs. As long as you do it right, I use the same strategy with currency pairs. Now, I was also trading futures when I first started my career back in 2001. I was trading the E-mini S&P. I was trading breakouts. I was looking for news events, small-term, short-term opportunities. You only get a limited time to trade it every day, right? So the time frame is a little bit different. But the techniques and the strategies are, for the most part, exactly what you see me doing here. So here is, for example, some continuation breakout trades back in the summer. Now, in July and August, we were trading the breakouts here with Bitcoin, the BTC USD on the MetaTrader platform. Now, with MetaTrader platform, obviously you can change the lot sizing that you decide to use when you execute a trade. You don't have to obviously buy one full Bitcoin to trade Bitcoin. That's the advantage. You can adjust the leverage and you can specify what it is and how you want to trade. Obviously, that's going to have an impact on the final results that you get. You know, when you see Bitcoin move, you're not going to get. It really all depends on the leverage that you decide to use. So that's a good thing with the MetaTrader platform. If you're going to trade Bitcoin, again, if you're limited with the funds, you can specify the lot sizing. Now, you can hear me sort of struggling with it because I wanted to go into a whole conversation about leverage and what's appropriate, but I'm not going to do that here in this video. I have videos where I talk about leverage and lot sizing according to the amount of money, the capital that you have available to trade. So you definitely need to take all that into consideration. But regardless, this is what we're trading here as far as this particular platform. So I have different accounts and different platforms that I'm executing Bitcoin trades. Some of them are one full standard lot, for example, the 1.00 lot sizing. This one is 1.05 lot sizing. And right now, just a few moments ago, it was up over, I think, $3,400. This is US dollars. Right now, it's at $3,200. Now, it has hit a target based on these breakouts. So let me show you what these breakouts are, these continuation breakout trades. Back in August, there was a trade, July, and we traded this for a few days and we ended up with I think it was over 738 points on that trade. At that time, I had showed some examples where we were using one full standard lot, which was 1.00. Some subscribers are using lot sizes. For example, they're using 1.00 lot size, but they're executing 2, 3, or 5 lots at the same time. So obviously you would times whatever the profits were in those videos. I have some videos that show those trades during July and August. So there's multiple continuation breakout trades. Now, when price starts going sideways with Bitcoin, now this is a daily chart, by the way. I'm going to show you what it looks like on the 1 hour chart. But when price starts going sideways and I see consolidation, I generally stay away from Bitcoin. And the reason is that, again, if I want to use a relatively small stop loss or a stop loss that I'm comfortable with, it may not necessarily be the appropriate stop loss for that particular instrument that I'm trading. If it's, and I'll show you that in just a minute here on the 1 hour chart. Because if, for example, if I want to use a 40 or a 30 or a 20 pip stop loss on Bitcoin, but it's trading inside a consolidation, the 20 or 30 point moves are nothing with Bitcoin. We know how volatile Bitcoin can be, and we know that it can run up really hard and drop really fast. And that would mean if I'm going to use a small stop loss like that, a 20, 30 point stop loss, I'm going to get stopped out prematurely if it's trading in a range bound sort of market consolidation. So I tend to stay away from it because I can't always use the smaller stop loss. So again, if I want to use the small stop loss, that's okay, but I have to be specific with the times that I'm getting into it, or the opportunity. So with a breakout, it's more likely to continue, and then once it peaks out, even the retracement still in most cases won't stop me out, right? That's what I'm looking for. That's the opportunity. So I have to so I'm going to have fewer trades, but I have to be very specific about the time that I decide to get into the trade to execute. So that's what I'm talking about. And that's really what the continuation breakout trade does. It allows me to safely get into a breakout and then trade the trending move that develops afterwards. But I have to have a take profit target. You'll notice that with this trade here, there was a specific take profit level, and then I stopped. Now it ended up moving up a little bit higher, but then you'll notice the pullback here, and it went back to the level that it broke out of, which was the prior high of that previous consolidation range. That's, I mean, it's really obvious. It's very, very obvious and really easy to read the technicals with this particular instrument, Bitcoin, when you leave it alone, when you're not forcing trades. So in other words, I don't come to my computer, my desk, and my trading platform expecting to trade Bitcoin every single day. If my expectations are that way, if that's what I'm doing, if that's what I'm looking at, and I'm only trying to trade Bitcoin, then chances are, if Bitcoin, again, going back to the previous example, is trading inside of a consolidation range, and I can't get away with using a smaller stop loss that I'm comfortable with, then I'm basically forcing trades and putting myself in a position where I'm going to get stopped out prematurely. Now I'm going to experience losses, as opposed to just simply waiting for the technique that I know that I can get away with using a small stop loss. I can confirm the breakout. I can confirm the trade. I can confirm why it's going to continue to trade in the direction of the breakout. And then at that point, also specify particular take profit levels so that I can lock in profits, get paid, right? I mean, of course, all of us would like to sit around and talk about, getting in at, 1,000 and holding it all the way here to 86. Only, that's an investor mentality. That's not day trading. And there's nothing wrong with the investor mentality. I do have trades, and I have purchased Bitcoin years ago. But what I'm getting at is, if I'm going to sit down and day trade Bitcoin, it's an entirely different approach. The basic principles are still there, but I'm talking about the technique of getting in and getting out and using a stop loss and trying not to get stopped out prematurely and taking profits along the way. This is a different approach. This is a day trading mentality as opposed to investing, where you're buying at a particular level and holding to another level, another specified take profit level. And again, for every investor, it's going to be a little bit different when you're buying and holding like that. So that's what's going on here with the technique and the strategy that I use with the trade copier that's going to execute these trades. So again, let me go over here to the 1 hour time frame. We're going to talk about the breakout. So here, the 1 hour time frame, you can see the consolidation that I'm talking about, and you can see how it moves around. So that's what I'm saying, is I basically stay away from that, but I use this behavior to confirm and to continue to apply the technical analysis that I need to decide, should I hold on to the trade? Should I cut the trade out? Cut it off at this particular take profit level. Now I have multiple take profit level and targets along the way. Here was 8,400. Here's 8,500. Here's 86. We've cleared 86. A while back, and this was in the summer, I believe it was in late July or August, we talked about the possibility, and there was some conversation. Bloomberg, there was some analysts that were talking about Bitcoin going to 10,000. And at that point, people were thinking, 5,000 was going to be right around the range that it would bounce around and travel around. And then from that point on, we would probably see it collapse. And there was a deep correction after that. And again, from the investor mentality, depending on where you get in, you continue to hold on to that trade, knowing that it's probably going to get pretty close to 10,000. Now, my target is 10,000 from an investor point of view. And I will consider to do some things with Bitcoin that I purchased years ago when it reaches or gets close to 10,000. However, I'm not going to sit and hold for 10,000 on the number. Just to give you an example and an idea of how this works, sometimes it'll blow right through 10,000 and it'll keep on going. And when it approaches that, I will probably do something not with the entire investment of Bitcoin, but a portion, and then use a trailing stop mentality where if it pulls back and retraces too deep, I just cut out of the whole thing. I don't want to give back too much of the profits. However, so when it approaches 10,000, it will probably and can go right through it and just keep screaming higher, just like we've seen, for example, the Dow after Donald Trump took office. And, there was a lot of people that were thinking it was probably going to collapse, and things changed. Now, years ago, I had some options on the Dow before it even approached 10,000. This was a few years ago, and it came so close to 10,000, and it didn't work out in my favor. And I learned a lesson at that point that sometimes there's still some profitability in the trade. And this is the same thing with some of these targets on the breakouts. Even though I have a specified target, sometimes that's as far as it goes, even though you think it might go a little bit further. So you have to lock in profits. You have to get paid. Now, with Bitcoin on the MetaTrader platform, again, that's a day trading mentality. We're using something totally different here as far as how to get paid, what profit targets we should be using, what size stop loss, where's the stop loss, what placement where should we place it? So again, it's a different strategy. And again, when it approaches some of these key levels, if I've been into the trade for quite some time, and for example, we had the target here at 84 and then 85 and then 86, we could probably expect to see some kind of a correction. It wouldn't surprise me, right? It doesn't mean that it has to happen, but it wouldn't surprise me. And it's only going to take a few articles and a few things. You've seen how Bitcoin reacts over the weekend, during the holidays, things like that. It will probably have a pretty, or could have a, I should say that. I don't mean that probably that it's going to happen. I just mean that it's possible that we could see a pretty sharp correction. If I'm day trading this, then I want to lock in profits before that sharp correction takes place. I don't want to sit through that. I don't want to give back thousands of dollars worth of profits when I'm day trading it. I want to get paid. I want that money. Right now we're looking at profits of $3,446, $52 now, and it'll probably keep on going for the rest of the next few hours or so. Again, when it reaches the level 87, I'm going to lock in profits. If it doesn't hit 87 but falls just close to it here, now we have a high of 87.06, but I'm talking about continuing. That candle, that 1 hour candle, closed at 86.84. I'd like to see a 1 hour candle close above 87. Maybe I'll hold a little bit higher. But again, at this point, my trailing stop it continues to move up with these price swings. But if it starts to sharply retrace, based on some article or some comment that an analyst over the weekend puts out on the Bitcoin dollar, it hits Bloomberg, it hits a few other places. I'm not going to give back all of these profits. I'm going to lock in that trade and then get back into another continuation breakout trade. If a retracement or a deep correction causes more consolidation that looks similar to this, then again, I'll just set up my support and resistance levels and start looking for another breakout and then trade it again appropriately. So that's really what it is that I'm doing with Bitcoin, the technique, the strategy. Again, if this one stalls and holds here, well, then I'll probably lock in these profits, and we're going to make about $3,200 on this one single lot, 0.05. Now remember, we have platforms where we're executing 1.0 lot size. You can change it. You can go 1.001. It's up to you when you're using the MetaTrader platform. You can adjust that. Find a broker that will allow you to make adjustments to the lot sizing so that you can comfortably trade Bitcoin. but you can see the size of the moves. 685 pips or points. I'm sorry, 685 points were up over at this point on this particular trade, but there were trades before that that continue to run. I have those recorded on the website. You can see those as well. It's a great opportunity to trade an instrument that isn't limited to what we see on a regular basis the way forex is. Sometimes forex will go into, consolidation ranges. We're waiting a great deal of time for, some bigger event to take place. For example, and I'll give you an idea of why it's a good idea to blend the two when you're trying to trade forex currency pairs along with Bitcoin. A few years ago, we were trading the European crisis, right? The Greek crisis, and the euro would react. And initially, when a lot of that news starts to really hit the market, and we're sort of new to the way the market is going, the price is going to move to the news with a particular crisis like that. After a while, the way it reacts, the way the market reacts, we get sort of adjusted to it. It's not as a big a surprise reaction. Traders' reaction isn't as sharp or significant to that particular news, and it sort of dies down. It sort of loses interest, and then the market will sort of gravitate towards something else that's going on. Maybe a vote that's taking place that's going to affect the pound. We had that for a few summers back, and so you can see these different events during that time period that we're waiting for the event to filter through. Brexit. Sometimes we'll get these bigger moves leading into the vote with Brexit, but sometimes we get these great deals or great trading ranges of consolidation. It's a great deal of time that we have to wait, and you get bored, you get tired. The market gets tired of it. It's likely and possible that you could force a trade where you probably shouldn't be trading because you're sitting there staring at a particular currency pair. Maybe it's your favorite, but there really aren't any opportunities at that time. So having the ability or the flexibility to trade something like this, Bitcoin, again, it's the same thing. It's not always going to happen, I'm not always going to have a trading opportunity. But when we get these breakouts, they're awesome moves. I mean, they're really fantastic opportunities where you can pick up 200, 300, 400, over 1,000 points. In the summertime, we had that one move that we picked up over 1,000 points on that trade. And then we had another one where it was 783 points. This one's 680 or 690 points so far, and it'll probably continue a little bit higher. So again, it's a great opportunity to earn profits from Bitcoin at the same time that you're trading and earning profits from Forex. You can really sort of go back and forth between the two markets. When there's something big and really heating up in the Forex, we can obviously trade that as well. But this is really going to be a good opportunity for a lot of people here on Bitcoin Dollar.